Greetings everyone. As promised in our intro, we said we would be profiling some stocks going forward. Given the sector with the most focus from traders and investors is of course the cliche AI sector. So here we are. Nebius is a stock which we like and is beginning to gain the focus of Wall Street whilst going somewhat under the radar until now. As a general overview, Nebius provides full stack AI infrastructure, with its core activity being a cloud software platform built for AI workloads targeting hyperscalers like big tech. If you're wondering what full stack means, then this is essentially a company which can produce the front-end user interface and the back-end server/database, etc. An interesting fact about Nebius is the company was born out of the Russia sanctions, as used to be part of Yandex, which was broken up. Nebius was effectively spun off and is now domiciled in Netherlands. Nebius is widely regarded as Europe's great AI hope, but is in fact listed on US indices. Straight out of the Berkshire Hathaway playbook, what is the moat of Nebius? As discussed, Nebius provides full stack infrastructure, therefore can offer a whole ecosystem akin to a very large tech company. It was announced on the 8th of September that it was entering into a $17 billion deal with Microsoft, which will provide access to 100,000 NVIDIA GB300 chips, leaving Microsoft less overstretched, enabling it to concentrate its data centers on customers. It's hope for investors that this will be the first of a number of these types of deals, which if executed right, really could be the game changer for the company. Okay, so we've already mentioned the N word, but it's never a bad situation for investors when NVIDIA have a holding in the company and they currently own 1.2 million shares. Whilst not a comparable position to CoreWeave, it's a name you unquestionably want in your stable. We have learnt from SoundHound, which rallied from a few bucks following NVIDIA's involvement up to $25 and then back down after the NVIDIA furor ended when they closed their position. So if we take a look at the financials, ultimately the company is not yet profitable and we see little point of detailed financial analysis going into results on November 11th. Also, the company doesn't have previous year's full annual results, also known as a 10K report, going back really to 2023. Drop curve massively favours analysis of full year results, as companies can have bad quarters affected by large one-off expenses or revenue just coming in lumpy. But we can confirm some metrics. Market cap of 31 billion. They had an annual revenue at the end of 2024 of 117 million. EBITDA is currently a minus 226.4 million dollar loss. His PE ratio is, sky high $100. We like to look at free cash flow, but the company's unlikely to be cash flow positive until 2029. Return on capital employed is another one of our favourite metrics, but this is going to be negative because you use free cash flow to firm as part of that calculation, and we don't have a positive cash flow just yet. We will do a deep dive into financials after the results and also compare Nebius and CoreWeave in a bit more detail, as both report on the same day next month. So, it all sounds hunky and dory for Nebius, but, what are the risks? AI bubble would be the first one. Sam Altman has said himself that we're in an AI bubble, but we don't know at what stage. Not all companies will justify their valuation, and we don't know the long-term winners of AI. We may only be scratching the surface, or we could see a dot-com style crash very soon. Execution risks. The Microsoft deal really is a double-edged sword. Ultimately, the Microsoft deal is reflected in the company's market cap. That you'd have to say that that's now priced in there. If there are issues gearing up for the additional Microsoft strain, then not only will there be concerns on whether that order will be fulfilled, but there will be a huge doubt as to Nebius landing further tech behemoths. Make or break is a phrase not out of place here. It's an ultra-competitive market. There's no denying that. Players such as CoreWeave, they'll be well positioned. They have a mammoth deal with Meta, and they'll benefit from any slip-ups by Nebius. And then you've got your general macroeconomic and market risk. The market does look toppy. There's no denying that. This is an inherent risk for all equities, really, other than maybe sort of your value type picks. It's no secret that the bull run is close to entering into a fourth year. Will that continue? Stocks sensitive to regional banking concerns. We did observe that on that news release, Nebius and CoreWeave both went off 8 to 10% in a single day. This may not have been a direct correlation. It could have just been profit taking, and then people buying back in for a big rally into results. We're not quite sure there, but we did see a big sell-off when that news story released. I mean, these stocks have been on some run, Nebius and CoreWeave. There's no denying that, and we don't really like PE ratios, but it does have if that's your bag, it does have a PE ratio of 100. So a lot of future success is baked into this valuation if you favour that metric. There'll be future videos and analysis on what we think about PE ratios, PEG and EPS and return on capital employed and FCF. The latter two we really favour. So what are the brokers saying? Again, brokers are treated with a degree of scepticism by drop curve, as we never know the real reason or for whose benefit a broker allocates a target or issues an upgrade or downgrade. We never really know the real reason, so it has to be taken with a pinch of salt. We certainly wouldn't be opening or closing positions off purely that. But we do acknowledge that broker ratings around support, resistance levels, moving averages, they do have some weight. The average 12-month broker target at the time of recording is $91, but many of the broker ratings won't have the Microsoft deal factored in yet. So that might look low, but I think once we get through earnings, then you could see a lot of upgrades and certainly targets rising. Certainly the target issued by Sarfati Investment Research does, as they have initiated coverage at $240, citing tech giant potential characteristics with multiple revenue streams possible in the future, which is of course highly speculative. But this is the sort of thing you want to be reading about stocks you're interested in buying. If you're a chartist, we've taken a look at the price action. As you can see in the chart to our right, the stock topped out at 141 outside of hours and 136 intraday. It has a highest close of $135.46. That was back on the 13th of October, and then we've obviously pulled back quite a bit from there and then bounced back up. Stock currently at 123, 124 at the time of recording this. We can see that pull back to $95 last week. Hunting perhaps that average broker rated around 91, but found support on the 50-day moving average. Drop curve has noted strong bearish engulfing bars have been signals of big pullbacks in AI stocks. Nvidia was a prime example in August 2024 when a sector rotation happened. Nebius followed a similar pattern, so it's perhaps a chart pattern to be aware of. Smaller growth stocks are not best companies to apply chartist strategies, but should not be ignored for entry points or signs of rallies fading. So what are the next catalysts? Q3 earnings are due out on November the 11th after market close. Investors will be looking for commentary on the impact of Nebius AI Cloud AFA 3 launch and the positive impact that could have on future earnings. Naturally, execution updates on Microsoft deal and any further positive developments on that will be looked favourably by Wall Street if referenced in the results. And, a further development which came out back on the September the 10th, Nebius announced a $3 billion fundraise to fuel growth. The action is made up of $2 billion in convertible senior notes. For those wondering what on earth these are, effectively they're bonds that can be converted into equity. Plus there was a $1 billion rights issue of Class A shares. So, some dilution there, but dilution for potentially good news story. So, perhaps not a catalyst, but, the extra funding could facilitate further catalysts. Another recent news story, and this kind of relates to the fundraising, is a big investment into robo-taxi firm Avride by both Uber and Nebius, and there could be as much as 375 million invested through a multi-year deal. Possibly not a catalyst, but further evidence of Nebius spreading its wings, and ultimately investors would share in the success of Avride. So that's it, folks. Really appreciate everyone listening, and if you enjoyed this video, then please hit the like button and also subscribe. It really helps us out in producing the best possible content that we can. Thank you.